This month was a pretty good month for stocks in the grand scheme of things, with the S&P 500 up around 4%. This is much less than the gain from the month prior, which is around 10%, however, I can't complain. During this time, I invested a bit more money into the stock market, but not a ton, as due to the high stock prices, I am currently working on buffing up my savings. Also, due to the fact that it is the holiday season, I did spend quite a bit this month, which means I had less money to invest. That being said, my dividend portfolio has been doing well, and I have two new positions I will be showcasing in this video. Anyways, let us get right into it. Before we start this video, make sure to like and subscribe if you're new to the channel, because I will be posting dividend stock videos just like this one every few days. Firstly, let us go over the dividend income I received since my last video, and it is much better than last month, as in December many companies paid out. 5 different companies in my portfolio paid out since my last update video, and I will go over all of them right now. The first of these companies was United Health Group, ticker UNH, one of my favorite growth stocks. This company paid me $10.68 on December 12th. The second company that paid me was also one of my favorite growth stocks, and it was Microsoft. The tech giant paid me $10.15 on December 14th, which is pretty good considering the fact that they yield under 1%. The next stock that paid me was Coca-Cola, and this was actually my lowest payment this month, as I don't own that many shares, but the company paid me $7.25 on December 15th. These next two payments though were some heavy hitters, the first of which was VTI, the Vanguard Total Index Fund, which is currently my only ETF holding. This ETF paid me a pretty nice $27.22 on December 27th, which is a nice extra Christmas gift. The next company that paid me was Broadcom, ticker AVGO, on December 29th, which also paid me a nice $26.25, which comes after their recent dividend hike. In total, I was paid out a pretty fantastic $81.55, which although I do not think is a portfolio high for me, it is definitely an above average month for my portfolio in terms of dividends. Now let us talk about some of the buys in my account. This month I added 2 new positions to my portfolio, and I also got rid of one. I invested around $1,850, around $1,350 of which was because I freed up money by selling existing shares, meaning in total I invested around $500 of new cash into my account. I will reveal all my buys starting with the least and going up from there. Starting off, we have Visa, ticker V, which I bought around $70 of this month. This is definitely not a lot, it's only about a quarter of a share, but I'm still slowly adding to this position even when it is nearing all-time highs. This is because I am such a fan of Visa's proven business model. I've already talked about this many times in the past, including in my most recent video, so I will cut to the chase. I am planning on buying Visa stock for probably the rest of my life. Their immense cash flow and high profit margin will make them a great company to be a part of going into the future. The second position I added to this month was just around $100 of VTI at an average cost of $237.33. This ETF, like I said earlier, is the only ETF in my entire portfolio, and it is the total stock market index. It has shares of thousands of different companies listed within the United States. That being said, the ETF is weighted, so it has about an 80% overlap with the S&P 500, and the rest of the stocks make up just around 20% of the ETF. Going into 2024, I'm going to keep throwing cash at this ETF, as it really is a no-brainer. The only thing I would possibly replace it with if I was to start over would be VT, which includes international shares, but at the end of the day, I think this is a great ETF to buy and hold forever. The third stock I bought shares of this month, which is still only a little bit, is Realty Income, ticker O. I bought 3 shares of this company at an average cost of $56.60. I have been skeptical of this stock in the past, but going into 2024, a time where much of the market is at all-time highs, the historically cheapish price of Realty Income is attractive. I'm still focusing on growth more so than dividends for the most part, but this is a good high-yielding stock that can buff up my yield either way. In addition to Vici, these 2 REITs should help bolster my portfolio's yield. The last stock on this list, the one I bought by far the most of this month, is another new position, and it is Automatic Data Processing, ticker ADP. I like this stock for many reasons. First of all, it is a different type of company than the rest of my portfolio, giving me some more diversification. Secondly, the way ADP operates is something I can get behind, as it allows them to generate a good amount of money with decently high profit margins. They also pay an above average dividend, and although they are not cheap, they are at a decent price right now, all things considered. I do not love this stock more than some of my absolute favorites such as Visa, Broadcom, and Microsoft, but ADP is also less aggressive than those stocks, allowing exposure to good growth and dividend dividend with a little less volatility. In total, this month I invested $1,843.19, which resulted in $52.09 of added income. Talking about my sells, I did sell one stock this month, my highest yielding stock, Altria ticker MO. This is a stock I only bought recently, but after contemplating the goal of my portfolio and the vision going into the future, I realized that Altria did not fit my portfolio that well. The high yield and long dividend history of this stock is fantastic, however, the sustainability of the business is a large worry. I sold at an average cost of $41.32, and it has dropped even further since I sold it despite a slight market rally. As smoking rates continue to plummet in the United States, Altria is forced to either keep hiking prices or focus a large part of their business on new ventures. The price hiking option is clearly unsustainable as shown in Q3 reports, and it is uncertain whether they will be able to capture a younger consumer base with their other alternative products. Long story short, this stock doesn't fit my ideal for this portfolio, and that's basically why I cut it. Alright, so we're just going to take a look at my overall portfolio right now, and as you can see, it has been doing really well with the total gain/loss currently sitting around 17% or $5,442. This is just unrealized gains though. If we look at the total overall for the year, as you can see, I am beating the S&P 500 by a very healthy amount, which is the goal of this portfolio. Anyways, let's just talk about my positions really quickly as I do in these update videos, starting with the biggest, which is VTI. So looking at some numbers here, VTI since I bought it is up around 9.5%, which definitely isn't too bad considering the fact that this is one of my more defensive holdings. I currently have around $6,500 in this position, which is great, and I'm looking to actually continue to buff that up. As you can see, my average cost basis is around $216, which is quite a bit lower than it currently sits. However, at some point I think my cost basis was actually a little bit lower than $210, but I've been adding to VTI over time, which has raised my cost basis. It currently makes up around 17% of my account, which although definitely isn't low, it's a little bit lower than I want it to be, as if this is going to be my only ETF holding, I want to buff it up a bit. I was thinking about adding other ETFs to my portfolio such as VXUS and SCHD, however for the time being I'm just going to stick to VTI. My goal is to keep buffing this position up. I'm not sure necessarily where I want it to be, but around 20 to 25% I think would be a good portion of my account. My next position here is Broadcom, and as you can see I have $5,606 of this company, which is just insane considering the current price is well over $1,100. In my last update video, the price of this was nowhere near this amount. I remember in my last update video I made the prediction that the stock would hit $1,000 in the near future, but it has already surpassed that by a pretty healthy amount. I'm up around 65% on this stock overall, which is actually super fantastic. It's my best performing stock in my portfolio right now, and it's also super important to note that the stock still pays an above average dividend, which is just crazy to think about. I currently own 5.023 shares. I used to just own 5 shares, but due to the recent dividend payment that I talked about earlier in this video, it actually went up a little bit, so I got the 0.23 shares, I guess technically for free, due to the dividend. My next position here is Microsoft, and up around 16% on this company, which is also pretty good. It makes up around 13% of my account, which definitely is weighted a bit high, but that's actually a common theme with this portfolio, as you can see, is that a lot of my top holdings are weighted very heavily. That being said, I still love Microsoft. Their business model is crazy. The amount of money that they make on some of their different products, such as LinkedIn, is just unbelievable. I mean, Microsoft has so many different income streams, and it makes it a really great stock. I currently own around 13.5 shares, at an average cost of $324. And I remember at the time when I bought this, it was actually pretty expensive to buy at $324, but it has continued to rally. And we're sitting at just north of 375 right now, which is very fantastic. And I think Microsoft is nearly a $3 trillion company, if I'm not mistaken, which is crazy. The next stock here is Visa. This is one I talk about pretty much in every video, it seems like, because I love this company so much, and it's also one I talked about earlier in this video. But I've been buying more shares of this company, and it makes up just, exactly 11% of my account. It's kind of funny how Microsoft and Visa both make up perfect percentages, but yeah, I'm up around 8% on Visa right now, which is definitely less than some of my other stocks. As you can see, Apple, JP Morgan, Microsoft, and Broadcom, and even VTI are all higher than this. Hell, even United Health Group is actually higher than Visa. But that's actually not something I'm worried about. I still love Visa as a company, even though it hasn't been one of my top performers, and I don't actually see much wrong with their business model. If you want to know a little bit more about why I really love Visa, in my most recent video, the 3 stocks I think you should buy in 2024, I do go over that, so you should make sure to check that out. I'll put a link to that video in the description. The next position here is Apple, and it's currently sitting at $192, and my cost basis is at around $164. This is not the all-time high for Apple. Apple is actually just very close to breaching $200 earlier this year. However, I don't actually think it ever reached that mark, but still $192 is pretty high price and not something I can complain about. I'm up around $600 on the stock so far, which is insane to think about because the stock is, the biggest company in the world. So it's pretty mind-boggling to see this company continue to grow, but Apple is just a great company and they continue to impress investors. And so obviously I am a big fan. They make up just north of a tenth of my account, which is definitely pretty decent, all things considered. The next stock here is my only bank stock, and it is JP Morgan Chase & Co. And this is a fantastic company. I'm up almost 20% on this stock, which is pretty amazing to think about considering the fact I actually considered this stock to be a more defensive position than some of my other holdings. As you can see, it's actually very similarly weighted to Apple. It makes up 10.56% of my account, which is pretty fantastic, and I own 24 shares. I really like JP Morgan. I think if you're going to own any bank stock, you have to make sure to be owning at least a little bit of JPM. I think they're just the best bank to own in the entire world. They also do yield a pretty nice amount, I think in the mid 2%. So I think JP Morgan is just a no-brainer holding. I've actually looked recently at buying more bank shares, potentially Bank of America, Wells Fargo, and other international banks, as I really like the financial industry in terms of stocks I want to own. However, I have not found any banks that I like even close to JP Morgan, which is why I'm only sticking with this stock so far. Next stock in this list is my only health sector stock, and it is United Health Group, ticker UNH, and I'm up around 8% on this stock. The stock has fallen quite a bit from its 52-week high, I think around $20 or so, but that being said, I'm still up around 8%, so I can't complain. The stock only makes up around 7.65% of my portfolio, which when you think about it is actually still a pretty decent amount, and I own 5.7 shares of the company. My average cost basis is pretty low actually, it's at $487.92, and if this stock is ever to go below $500 again, I will absolutely pick up more shares. However, at above $500, I'm just a little bit reluctant to. The next stock on this list is Vici Properties, one of my newer positions, and I'm up almost 5% on this company already, which is fantastic considering it is a super new position and also considering that it is a dividend play. It makes up around 6% of my account, meaning I'm up around $100 on it so far, which is pretty decent. I own 75 shares at an average cost of $30.30. One thing I want you to note here, though, is that on these stocks that are near the lower end of my portfolio, they're all pretty much in the middle or slightly on the right of the 52-week high, as you can see on the right of the screen. Compare this to my biggest positions, which are all at the other end of the spectrum. These are all almost at 52-week highs, which makes sense. They're my biggest positions, so they've been doing the best. But because of this, I'm actually looking at adding more money to these stocks down here to buff up these positions, as they actually are sitting at pretty reasonable prices compared to some of my other holdings. Vici is definitely one of those stocks, even though I'm up already over 5%. As you can see, we're still pretty far away from the 52-week high, meaning I can still feel pretty confident in picking up new shares and not feeling too guilty about it, thinking I overpaid. The next stock on this list is Coca-Cola, ticker KO, and it makes up around 5% of my account, and I have just around $2,000 into the company. I'm actually not looking at adding any more shares of Coca-Cola to my portfolio for the time being. If this position is to go red, which is definitely still possible, I'm only up around 3%, I would consider buying more shares to lower my cost basis, but as it currently stands, I'm not looking to buy any more Coca-Cola shares. It is a fantastic premium company that is definitely worth owning, but I'm also aware of the fact that it is definitely a low growth stock, which doesn't necessarily fit my overall portfolio, but I'm also okay with owning it just because of the fact that it is an anchor for my portfolio. The next stock on this list is ADP, and as you can probably tell, you can't actually see the total gain/loss anywhere, and you can't even see my average cost basis. And the reason for this is because ADP is actually just about to pay a dividend, and the thing with Fidelity is that when a stock pays out a dividend, Fidelity takes some time to calculate the total gain/loss and the new average cost basis, which is exactly what's happening here. That being said, I am up technically on this position, but I'm only up around 1.5%, as this is a very new holding of mine, so it really doesn't account for much. And this is also a very small holding, only making up around 4% of my account. I have talked about ADP recently in another video, so I won't really talk about it a ton here, but it's just a different company that I think is worth having in my portfolio because of the growth, the dividend, and the diversification. The last stock on this list is another new stock in my portfolio. It is Realty Income, ticker O, and as you can see, I only have 3 shares of this company, meaning it makes up less than 0.5% of my account, which is basically nothing. That being said, as you can see, Realty Income is pretty far from their 52-week high. They're actually sitting kind of close to the middle of the road between their 52-week low and their 52-week high. And this is a stock that I think during 2024, as many of my other stocks are super expensive, I'm going to add more cash to in the future. This stock's super high yield should help buff out my dividend yield in my portfolio, which would be a very great thing to see and should help give me some more passive income. Okay, so let's really quickly talk about the dividend payments in my account. And as you can see, my new annual revenue for dividends is around $671.77. This is quite a bit down from last video, but again, that is because I sold out of Altria, which is a 10% yielding stock. My highest payer is currently Vici, and my second highest is actually Broadcom, just because of how many shares of the company I own, and because of the fact that it has a pretty decent dividend. But my goal, as it currently stands, is to get Realty Income to be one of my top dividend payers. This is not a super hard goal overall, as Realty Income does yield a lot more than basically all of my other companies in my portfolio, other than Vici Properties, so getting it to be in the top 4 of dividend payers in my portfolio definitely wouldn't be too difficult. As I said earlier, my dividend income is down considerably from where it was in the last video. However, overall, I am okay with that. I sacrificed Altria and its high dividend for some better growth stocks, and I think in the long term that will pay off, as I don't know how sustainable Altria's business model truly was. Anyways, that's basically it for the dividend income. You can basically look at each of my individual stocks' income right here if you want to check that out now. Thank you guys for watching the video. If you enjoyed it, especially if you like my portfolio, make sure to comment why down below. If you think there's anything I can improve on though, let me know as well in the comment section. I hope all you guys are enjoying these monthly updates because I love putting them out. I'm still looking forward to growing this portfolio slowly but surely. My current goal with this portfolio is to reach $100,000 at some point in the future, but that will definitely be a slow process. Anyways, I will see you all in the next video. Goodbye.